So, what are my top 5 favorite growth companies right now? So, the way I look at this is two main things. One, the company has to be of supreme quality and high growth in revenue and just market dominance. And the second thing is valuation, because great companies can still be overvalued. I don't like buying companies at all time highs. This is not the right time to buy a company. A graph like this might look way more intimidating, but if you buy a company at this point, you have a much higher margin of safety. Of course, for a number of reasons, the stock or the crypto or whatever it is might continue to go down, but what's the probability? Is it more likely from this point it will go up or down versus this point? So generally, that's just a big thing I look for, but let's get into my favorite growth companies right now. These 5 are the most attractive to me on the surface level. You're going to notice that they're essentially big tech, and that's because right now big tech is kind of being overlooked. You can see the performance from about the past month, and it's down, which is perfect because you want to buy it here, not here. Remember that. Amazon, the company that needs no introduction. They have revenue growth of 43% year over year and a revenue multiple of just 3.9. For reference, the S&P 500 has an average price to sale ratio of 3.1 right now. So Amazon, being a super high quality company, is just slightly above that. When taking a look at what the company actually does, we see here they have their online shopping, they have some physical stores, third-party sellers. So this is most of the people and products selling on Amazon itself. It's a platform, so third parties do it. Subscriptions, AWS, of course, and then other. So we can see how it's all growing together, which is kind of a great thing. And if we want to look at just AWS, I mean, this company is on fire, let's be honest. And now when looking at the price of Amazon, looking at the past year, it has gone up. Most of that is from the COVID bounce from the bottom. But since then, it's been completely flat. And if we want to zoom out to the 5-year, we can see Amazon tends to do this. They race up, they go flat for a while, they race up, they go flat for a while. So to me, when considering the historical trends of this company, the past year, it's been completely flat, the price, while the revenue grew by 43% over that same time. I think it's safe to say that Amazon is a very high quality company and it has a pretty fair valuation right now. Now, Google is the next one I want to talk about. They had revenue growth last year of 34%, and they do have a slightly richer valuation than Amazon. I'm going to be completely honest with you guys. This one isn't as discounted in my opinion right now. If we look at the price chart of Google the past year and the past 5 years, we can see that right now it is at an all-time high, which should raise some alarm bells. So yes, this looks great looking at the past, but as investors, we have to look at the future. And you just have less of a margin of safety when the price is at an all-time high. Now, with that said, Google is still such a high-quality company. They make so much money, and their PE ratio is 31, which is kind of in line with the general market. It's not extreme. But the thing that really stands out to me is all the assets that Google has. We can see Google advertising, search, YouTube is a huge business in and of itself. The rest of the Google network, like Gmail, Docs, even Android, an entire phone operating system. They have cloud, so they have so much valuable assets, and they're all growing. So that's why I think this company is just one of the best in the world. And by far, the biggest threat to Google, and really the only threat aside from just the government breaking them up, is Apple creating their own search engine. So there's nothing official on this yet, but there is some rumors, and Apple is big on privacy. And I could see them doing this in the future because right now Google is the default search engine on all Apple devices. And that's not by accident. Google pays Apple a lot of money every year for that privilege. And I can definitely see Apple changing that in the future with their own service, but who knows? And if that does happen, you can definitely expect a drop in the price of Google. Although, like I said, when it comes to the revenue streams, they have plenty. So in general, I think Google is going to be fine. Next up, I got Coinbase for you guys. So this, of course, is the crypto trading platform. It just went public, so they don't have too much of a history, but we can see just how exponential their revenue growth is. I mean, look at that, almost 850%. I mean, these graphs are really a thing of beauty. I mean, it doesn't get much better than this. And of course, right now, Coinbase has been having a pullback. It just went public in the beginning of April here, and we can see that it initially was going at $328 a share, and now it's all the way down to $228 a share. Of course, this is going to follow the general market, and crypto has been tanking, although it does seem to have found a level of support. And because of this tank, it has driven down the value of Coinbase to what I think is a very attractive level. And you have a much higher margin of safety buying Coinbase with the price of Bitcoin down here versus up here. Now, a lot of people say that Coinbase is only an exchange, and all these, or the majority of its revenue comes from trading fees, and eventually that's going to go away as more competitors enter the space. However, I don't see that as being the case at all, because Coinbase, yes, they're a trading platform. They take fees for every trade, but they have so much opportunity to grow into a huge financial company. So take a look at this. This is SoFi. This is one of those new age banks, along with BlockFi and a lot of these new competitors. And I'd say Coinbase is definitely there, but we can see what SoFi is doing here. Look how many financial products they offer. They have investing both in regular stocks and in crypto. They have loans, credit cards, insurance, auto loan refinancing. I mean, look at all these products. And Coinbase can do the same exact thing, and they have a much larger client base. So I think Coinbase has a ton of room to grow the revenue streams and just introduce tons of new financial products. All right, so moving right along, keeping a breakneck pace here. AMD. They, of course, compete with Intel, and Intel has been shitting the bed lately, and AMD has been taking full advantage of that. They have a much better CEO, and they just ran a lot better than Intel right now. And that's being reflected in their revenue, which is pretty explosive. Year over year, it's 92%. They do have a high multiple, and when we look at the pricing, it has been cooling off lately. If we zoom out to the 5-year, we can see that it's not at its all-time high, and it's actually kind of following what Amazon is doing. After exploding up in price, it's having a consolidation period, and then after it gets done with this phase, after some catalyst news comes out, it's either going to break up or break down. What I do know is that AMD has been killing it lately. When you look at all the tech reviews, and same thing with Apple. Apple has been killing it with their M1 chip, but AMD has been slaughtering Intel, and most tech reviewers recommend Ryzen and AMD chips over Intel right now because they're just that much better. Now, in my opinion, the biggest threat to AMD is the general trend that I'm beginning to see of every company wanting to make their own chips. So Apple is doing this with their M1 chip, and it's been very well received. They've been kicking ass with their own custom silicon, and it makes their products way better and differentiated from their competition. So there's lots of incentives to do that. And we can see here that with the next Pixel phone, Google might be doing the same thing. In this case, Qualcomm is going to be the one that's biting the bullet. But if this general trend continues, AMD might suffer a little bit from this. Now, the last company here is Alibaba. If you're not familiar, this is the Chinese Amazon, but they do a lot more than that. They have business to business. They have AliExpress and Alibaba, of course. And personally, I sell on Amazon, and everybody uses Alibaba in one way or another, so it's very tightly integrated and connected to Amazon, in my opinion. And like I said previously, I think Amazon has a bright future, and I think Alibaba has an equally bright future. We can see the revenue growth was 77% year over year, extremely high. And if we just take a look at some of the data, this is a fantastic growth company. Look at their business segments and look at the performance. Now, in contrast to the amazing performance over the past year, we can see that the stock price is exactly flat. So this whole time that the company was increasing users, making more and more revenue, the stock price didn't do anything. Now, this could be for a lot of reasons. This is a Chinese company, so there's lots of potential issues there, and that's definitely suppressing the price of Alibaba in part. There's also the controversy with Jack Ma and the Chinese Communist Party making him go away for a little bit. So there's all of that you have to take into consideration as well. But just looking at the fundamentals, the performance of the company versus the price performance, there's a mismatch there. And as an investor, that's one of the things I always look for when trying to find good value stocks. So these are my 5 favorite growth stocks right now: AMD, Alibaba, Google, Amazon, and Coinbase. I think they all have pretty attractive valuations right now and very promising futures. All these companies, they have lots of paths to continue to grow. They have very prevalent products. They have substantial moats. And I just think these are great companies. So let me know what you guys think in the comments down below. I hope you enjoyed. If you did, leave a like on your way out. And I'll see you next time.